All right, video 2 of 3 on September 8th. EOLS. Okay, so drifting into a support zone. If you want to draw a box around the candle from earnings in August, you get your support zone. So it starts at 1450 and it extends down to 13. You should have a buyer inside that zone. Rallies into 1560 could fail and you may end up at that support zone below, so be careful of that scenario as well. ERJ. Don't know this company. Okay. Breakout from 31 with support at 32. So you might end up at 32 this week. I think it's hard to break out of 35.50. So we'll see. Maybe you end up at 32 this week. Ford. I wouldn't want to invest in any car companies before a crash. If the market crashes, I may be interested in Ford at like 7 for me. I just don't trust how well they can manage their P&L. And if, from technical perspectives, there should be no way the stock breaches 12 or 1250 sustainably. You might pop into it. This stock, whatever this is, anything above 1170 looks like a brick wall. 13 impenetrable. So, you know, this industry committed to a lie or lied to us. Either way, I don't want to touch it. They're either stupid or they think we're stupid. And either way, it's I have better things to do. But I would buy a crash. Like I should have gone back and bought the 80-cent drop in both GM and Ford. I would have lost all my money on GM, but made a bundle on Ford and made up the difference. I should have bought both at the same time. Because there's no way the government's going to let both car companies go under. And the one that did, they bailed out. So I would buy it in the crash. I wouldn't touch it here. I think I can put my money better in better places. I don't think it's shortable, no. There's not enough meat on the bone. What are you shorting? I mean, with what? Buying puts? It's. I mean, look at puts. There's not enough for me to sell a call or sell the stock short. And I just wouldn't invest in it. I would avoid it. Technically, you take out 1140, you can get to 1240. And let's see how that happens. And you should have support. If it's a cheap put and you think you can make money out of it, buy it. Try one. Get it out of your system. FCX. Look left. How do it know? So here is the low they just placed. Are we off by a penny? We're not. Oh, I drew in hindsight. Never mind. I won't take credit for it. See, I'm honest about my charts. I drew this in hindsight. I did point out the levels, but this I added after the fact. So what I'm saying is that this looks vulnerable, but it's a pretty good solid zone of support. So there should be a buyer, if not at 39 or 38, definitely into 36.50. So the easy drop has happened. If you want to short it, short a rally into 44 because it's going to be difficult to cut through these 3 white lines. So you're basically stuck between 3 white lines and anything below 37. From an investment perspective, this could be a starting point. Definitely leave room to at least double your order. If I'm long already, I'm not adding here until I figure out what the market wants to do. FedEx, you have sellers at 292, I think. If we rally into 292, 293, the red line is a heavy zone of resistance. I would short a rally more so than catch the knife here. I think you have support scattered into 274, and I think losing 274 is easier than breaking out from 300. This is a catalyst for the highs, 300, and this is 275 is the catalyst for 258. So I'm saying it's easier to get to sub 260 than over 305. It has earnings on 9/9. Okay, that'll be interesting to watch. So I think this is easier than that. I think this is resistance. And this is support, but it's easier to get there. Flux capacitors. I don't know what they do. Flux. Look at the sales P&L. Oh my gosh. And then now nothing. I'm always wondering, like, how can this be represented with this quarterly? So look into their sales. Is that a one and done story or what? It looks like losing 330 or 340 was very painful. It may drift down to 260. We'll see. Has support at 290. Frontier. What is this? Oh, frontline shipping. Okay. So logistics. Playing with fire. You better not lose the August low. You can end up at 20. Meanwhile, sellers above 24. Very hard sellers. I would use rallies to get out of trouble. Okay. What is going on here? Good Lord. Another company to short. I don't want to short any more companies, please. Yeah, so this here is not an obvious point of entry. Although it looks like a breakout, and the breakout could hit 85, it's going to have to do it without me. If you twist my arm, I would short it. A credit call spread and or a debit put spread, like a $10 wide. But I'm not compelled to do so. I think earnings are coming up in 10 days, and I would trade after the earnings. I would buy the dip into support rather than risk some money on a coin flip. But this here, the easiest way to say it, is not an obvious point of entry. All right, so jumping into GM, complete opposite of Ford. The chart looks frisky. It wants to break out of 51, and if it does, it might have some more upside. But that's pretty weird. It's inside of a zone that I labeled R. Let's zoom out and see what that is. The mark of excellence, I don't think so. But they are overcoming some pretty solid levels from before. So look at how pivotal this area has been. Careful shorting, but it is tempting for somebody who double tap. There's no such thing as a double tap, James. Double tap is a comment, I would say, after the fact. There's no study called a double tap or anything. Double tap, you're just saying it's an area of failure and it's an opportunity to break out. Every breakout is a double top or a triple top. So what would you call this? A quadruple top? Quintuple top, and then it's a breakout zone. So it's just an area of resistance. It's the problem and the opportunity. Okay, so I don't know if I would hold calls. If I wanted to hold calls, I would sell puts or put spreads to own those calls. So I wouldn't spend money out of pocket. It is shortable against that area of failure that we just discussed as a double top. So I can short against 55 if I can, if there's premium in a call. So I guess whatever you want to do with it is fine. Google is going to my line perfectly, and I know I did not draw this one in hindsight. I first drew this white one. It hit it, and I said, what if we repeat the pattern? And I copied it and pasted it over to the right. We hit it. This whole zone is supportive for Google, but it's wide. That blue box was one headline, a Gemini headline, which has been regurgitated 100 times over. Weird that Alphabet stock was struggling first before the market, and then the market did what it's doing. So I'll be keeping an eye on some strength that shows up in the stock before the market. Until then, I would assume that they're going to try to sell 158 or 160. Tom, it's years of looking at tickers. So I would think that they would try to rally. For example, I would copy this pattern, expect something that looks like this, and then see if it actually happens or not. So a rally might come, and I think we will hit some resistance. So I would copy these, comments and bring them over to here, one would expect that there would be resistance in this area. All right. To be specific, 160 looks pretty pivotal to me. So let's see if this plays out. And I wish I could put a default mode on this to be globally syncing, and this one does not sync globally. Nope. Okay. Good company, by the way, Google. They're doing some questionable things that are taking away my freedom by what I want to do parameters wise, but anyway, they provide a good service. They don't charge me for it, so I'm good with that. GRBK. This does not look very bullish. 77, 79. If you overcome that, you might be able to break out of 82. Otherwise, you might drift down to 71 or 69. IBM, I'm short and I'm still short. This boggles my mind. I don't get it fundamentally, that this is doing better than so many other companies that are doing better. So this P&L does not inspire confidence in growth or that they know what they're doing, yet the chart has more confidence than all the other charts. I'm short and I'm staying short. I don't think I'm making money, so I'll see when I'll make money or pull the ripcord. I left room to add to my short. I don't think I will. So I'll decide to stop out or not, and I'll update you on that one. 197 looks like a pivotal zone, 194 as well. INTA. Okay, that looks vulnerable from this. Oh, grief. Okay. What are you asking me? Are you asking permission to short? Permission granted. Are you asking permission to get long? Not in a million years would I ever consider going long a chart that looked like this. Not in a million years. So I don't know what you're asking. Better areas to enter, 39.50 or lower. Intel, avoid, 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 avoid. I've been saying that. I missed the bounce, but I think 2 or 3 earnings ago, I said, leave this company. Management doesn't know what it's doing. A couple people in the group said, no, you don't know. I said, no, I don't know. That's exactly why I'm saying I would avoid it. So I've discussed this with a few people that said, I'm betting on it for a long-term recovery. I get it. If that's the case, fine. They do have a legacy and they may spring back from it. So treat it as a speculative startup. So if I wanted to risk $1,000 on it in a large account or 10,000 in a super large account and sleep on it, what I would do is I would take half of a position in shares and sell calls immediately on them. And then if the market's correct, I'll add the second half and just own it for the investment bounce or whatever you have in your head. As a turnaround story, I mean, it would be fantastic, right? So it's worth it from that perspective. But it's not an investment to add to like it used to be. Like if I own Apple or Microsoft, over time I want to add. This is not it. This is a speculative recovery, like a startup, because that's where they are right now. They dug themselves a hole that makes them like a startup. So chart's not going to help you much. How to manage risk is. JD, be aware of my white path. Look, it's playing out with a lot of fluctuations around earnings. It's going to be super difficult to take out 28. It has support spread through 24. Craft. Tired and broke. Yeah, the fact that they discontinued the dividend was shocking. 37, not Craft, Intel. 37.50, the R is still there. 36.50 is the opportunity to pop into 38. And then anything above 38 looks difficult. Look at that. So you're stuck between a lot of sellers. I mean, you consider that an opportunity. Why would Kraft Heinz break out of here? with this P&L. And you have super solid support below. Nothing to do if you're an investor. And it's not a trading kind of stock. KMI. What in the world? Okay, so these lines went well. So let's delete them while we're here. What? Oh my gosh. Yeah. So this is shortable. What the? What is going on with this company? Yeah, okay. So this is an exit spot. If I'm long, I would hit sell, sell, sell right now. And I could sell a call spread and or buy some puts to see if I can make some money on the short side. Doesn't inspire confidence at these levels. Doing well though, comparatively, surprisingly well. KO we've done earlier, but we'll do it again. I'm short and I'm staying short. I may get 68 out of it, maybe 67. However, 70 is a solid support zone. So if you're making money with me on this one, make sure to lock some profits. Leave runners if you want. KRE, I am short. I sold calls, I believe, but I should have bought puts again. We won with it one time, and this might drift towards 52.50. And remember that this has the banks that are most vulnerable to a financial crisis. That's what they told us last March. We had a headline. Oh my gosh, who's going out of business next? I believe I saw a couple that are teetering still. So be careful. It's not what should lead the markets up. Rallies into 57.50 and 58 should be shorting opportunities again. I am short by sold calls. Lennar. So these companies are super vulnerable, but the stocks are very resilient. It's almost like cruise companies. So they're very tempting to short, but I would avoid. You can't argue with illogical people. So if somebody has an account the size of Soros, they can short this company outright because we will have a crisis and you can catch it. But somebody like us, mere mortals, we can't do that. So I don't pick a fight with it. And earnings are coming up soon. Thanks for the heads up there. Technically speaking, you could drift to 171. Okay? And that would be normal. And then if you do and the market's correct, you could find yourself at 159. I'm telling investors that I wouldn't add here. Just wait for the 158, 59 to add. Love. What a bad name for a company. What the I mean, seriously? That's what you call your company? What in the world? Okay. 21 better hold. Earnings in 4 days. And 25, taking out 25 could give you 28. I honestly don't know what to say. 4 days until you flip a coin. LULU, I sold puts to own shares and they worked. That blue box, you're stuck in it for a long time. So I guess I should sell some covered calls, not covered calls, some naked calls too. I didn't think about that. Maybe I like what I did with Boeing. Interesting. Okay, I sold puts and I'm okay with them. I wouldn't own calls. I could own shares, and if I did own shares, I would sell covered calls immediately. I could sell puts in order to get assigned shares and then sell covered calls immediately on them. A lot that you can do with a company that has a solid P&L and is as volatile as this one. I don't like airlines, and I definitely don't like to buy them at prior fails. Look left. This is not an obvious entry point. Now, it does look, oh, the gap, Nick, the gap. Okay, so you go for it, not for me. You could get to 32, and if you're chasing the gap and you get half of it or 1/3 of it, I would exit. Leave the rest on the table. McDonald's, it's shortable with a stop above 298. Good company, very boring P&L. What the fudge is going on with the chart? Why is the chart like Tesla when the P&L could not be more boring? I think there's a good chance it's at 272. How about I say it differently? It's easier for me. I mean, let's just say it's a bearish chart with a breakout opportunity. So I would take a short or not take a long, buy the dip. And the short, if I do take a short, it should leave room for error because you will need to be able not to be stopped out at 299. If I was a market maker, I would come up here, poke, and then drop. Why would I do that? I would trigger all the stops. Good trend though. Solid trend. Meta. So political. This stock has become political. I would avoid it at all costs. This company, in my opinion, is a fraud. And I'm saying it from a user perspective. I use them as a merchant. And I caught them in a lie where they're actually physically cheating me out of money. Like they're physically sending fake ads and fake prints and fake leads. And I can't prove it, but I physically saw it with my eyes. So I know it's not a conspiracy theory. It happened to me. They collect money from me. I know the reports. I cannot go back to the report I saw, but one campaign had one ad have whatever thousands of views, and 98%, if not 99% of them came from one city in India. One city. Now, coincidence? Maybe. Maybe I'm popular in that city. I doubt it. It's fraud. If you buy stuff off of Instagram, good luck. You're going to be defrauded as well. It's happened to me too. So that aside, the P&L is bulletproof. Until they get caught, nothing going to be done about it. Now he inserted himself in the political realm by going against the leading regime. And this regime is ruthless, and they're going to go after him with a smear campaign. I would not be surprised to start seeing him in the same light that they paint Elon Musk at. Before that, he was God, and then he will be the devil immediately thereafter. So I would avoid this company at all costs. I am an international man of mystery. So let's comment on the stock chart. You have a solid buyer below, a solid seller above, and a short-term sell the rip mode. Just copy paste. So if you think that that's going to go on, just do this, and whatever is happening may continue to happen. So you might see something like this. Interest, area of interest, meaning you should find some support at 492. Doesn't mean they don't go lower. There are areas of interest lower than that. Nope, there aren't. They're all closed up. Okay. Monster, solid P&L, not so solid chart. Weird. So notice that they're trying to crack back into a place that they lost in June. Shouldn't be easy. 50-50 should be very difficult to overcome. So this red line is the heaviest volume zone, and it's above. So the bulls have a monumental task to get back in there. Solid floor below. So if I bought the dip, solid entry point, start selling some calls. I know it's volatile enough. Mo, I would short it for the same reason I'm short Coca-Cola. Oh my gosh. How did I miss that one? So how are they still in business? I mean, how is... Nah, I'm not going to go there. This here is not an obvious entry point. I'll say it and move on. Marathon, be careful. You do have a solid floor, multiple bounces, except for this island, this weird island thing. And look at where that island is, right at the top. So anything below here should be solid. If you're long Marathon, it should be a solid long. I would be long Marathon. Yes, that's also being done by delivery at your front door. If it dips to 162, I would take a long because you might pop back $7 or $8. This here should come back down up to 172, either from here or from a lower low. So I'm in a buy the dip mode or be long to buy the dip. So credit put spread or a sold put would work okay in this stock from a trading perspective. Medical properties. Not an obvious entry point, but it is an opportunity. If they break out of last week's high, they might come up to 535, which is another potential trigger. Looks like you have solid buyers below. If you're long, go for it. The P&L is crazy, so do your homework on that one. Merck, they're buying the dip into a support zone that extends through 115. Anything below that, it's backup support. So being long is somewhat okay, given you have support and backup support. We're not going to talk about lower lows below 111 because that opens a trap door. Opportunity is breaking out from Friday's highs. You might eat most of that gap. This is another one of those gap, not gap thing. The gap is not as big as you think. I think it ends up 122, and 120 is pretty darn close. I would have been out. If I bought calls or bought shares for the gap, I would have been out at 121. So use that as my directive. Microsoft. So the best company on the planet is so far away from its all-time highs, yet you get KO and MO that are going into, and IBM. Come on. IBM is up here and Microsoft is down here. What's wrong with this picture? It means sell IBM, buy Microsoft, for crying out loud. What are you thinking? That's my take for the market. Opportunity to build a position by rolling out of IBM. Best way for the stock to build a position, if I wanted to buy 100 shares, I would sell a put until I get assigned. And as soon as I get assigned, I start selling calls. Okay, so that's one way. Buying a call spread is another way. Buying shares, partial positions. I would leave room to more than double my position. Okay. Solid support, but it's scattered all the way down to 390. So on Friday, it flashed to a 400, and then it ended up going below it. So this week, we may retest those lows that we did in August. People are brave when they're chasing stock to the moon. I don't know why. And people go chicken when a stock falls into solid support. Don't be chicken. Have that mentality. Be a fire person. Run into the fire, financially speaking, to see if there's an opportunity. If people are panicking out of a room called Microsoft stock, run into it. Maybe somebody dropped a wallet and you want to pick it up. Okay. 1 second. I'm getting scammed with text messages. That's weird. Good company, falling into support. I buy the dip with confidence. Micron, I would buy the dip. No, I wouldn't buy the dip with confidence. This has been a great moral victory for Nick, because I was talking about a weird situation when the market was chasing Micron beyond reasonable expectations. At the same time, they were selling the leader of this market, NVIDIA. Actually, they weren't buying NVIDIA with the same fervor as they did Micron. That has been resolved. So I don't have hate for Micron. I hated how the market was chasing it up here. And then when I spoke about it, I was told many lessons by friends that how I'm ignorant about the fact that they're the only game in town and this and that, and it's about the future and all of that. It's like, I get it. I've been investing for a long time, so I get the whole concept, but the logic didn't play out. Either NVIDIA was super cheap or this one was super expensive. It turns out it was both at the same time. Boom. That error has been corrected. Since my complaint, it lost almost half of its value. So now it's in solid support zone. So if now somebody building a position in Micron, I love it. And if they're not, I'm asking the people that were buying it here and afraid of buying it here, I'm pushing back that skills are lacking and or homework is lacking. So I'm going to add it to the to-do list for me. Like, I may even sell puts to own shares because they are one of the few gigs in town. and demand should grow. So they will figure it out. I have issues with their margins and such, but they're making progress, and I'll track that progress. Starting point, knowing that I might get a hefty discount. So if I'm long, I'm not adding. If I'm starting a position, I would leave room to at least double it, because you might get an entry point below 60. What? Yes. If the stock market corrects, this thing will be below 60. I can almost guarantee it. But I wouldn't short it for that. Therefore, I would say start a position, leave room to double it. Okay. And then you'd be fine in the long term. Netflix. Netflix is now also a political chart. Can you frickin' believe it? That there's also rumbling about them like Disney. Political this, political that. Do your homework. The company is fine. The financials are great. There's going to be chatter about them losing memberships because of something they did politically, the company. I don't know if it's true or not. I don't subscribe to it, and somebody told me about it. I had an Iron Condor. The Iron Condor worked, albeit was under fire. I would repeat that Iron Condor, or sell credit put spreads on dips. And if I owned shares, I would comfortably sell covered calls. In fact, it's irresponsible not to, in my opinion, because it's just money sitting on the shelf. Technically speaking, 635 is doable, 640 to 635. And technically speaking, this could extend to 610, 608. Just to give you elasticity. In other words, that green box, 1/3 of it from the bottom is solid support. Like anything below 605 should be solid support. That's a longer term conversation, Corey. It won't go there alone. Okay. Who is this? ServiceNow. Great P&L on paper. And solid trend. Just the chart doesn't inspire confidence to add. It is a very confident chart for a good reason. So buy the dip mode should be engaged. Anybody that bought it below 760, 770, genius, do it again. This is an earnings reaction box. Consider the whole box as bulletproof support. So let's say one day it crashes umpteen% and falls into the middle of the 760, 750 area. You should step up to the plate and say, how can I get started with this company? If you don't own it now. There's no need to own it now as a starter position, but on dips, solid. Traders, you know what you're doing. If you lose 810, you're going to get an entry at 775. If you lose 775, it means the market is correcting hard, and I would get another entry in the low 700s. Good stock. And you, look how solid this P&L is. Pretty strange. So if you want to draw a box on NU, just draw a box around 13.8 and 12.1. That's your support zone. The closer you get to the bottom end of the box, the better the entry point from a trading perspective. So you basically went from point A to point B. Wow. Next time it goes down here, jump all over it, man. Who is this? Yeah, I'm going to put an alert for myself. Okay. Solid company, just buy the dip. There's no rush to do it here. If you get an entry flash low below 1260, jump on it. NVIDIA hit all of our targets. So when I said red W, you see that red W? I said red W bearish. Target 1 of red W came to fruition. Target 2, you see my comments here? Target 2 of red W came to fruition and then some. I didn't put target 3. Oh, I did. Target 3 of red W is actually a little bit higher than here. It spans 101 through 94. Maybe we're drifting there, maybe not. It is an excellent entry point in a great company that's leading the world. If NVIDIA loses 90, folks, we will have a correction in the stock market like you wouldn't believe. I've said it before, NVIDIA is the market. Market is NVIDIA. There's no scenario in my head where the stock market is going higher while this stock is going lower and vice versa. So you better pay attention to it. This week, it will try to go to 110, maybe as early as Monday or Tuesday. What happens there is super important. 112, you should have a seller. 116, you should have a seller. 118, you should have a shorting opportunity as a trade. 126 has been massive pivot zone. All those lines we drew, they all played a role this week. Look at them. So I will extend them. Test 1 is still a pivot, 118, 126. Yeah, they went above it, but the zone held. So this should be impenetrable. There's no reason it should lose 91. And if it does, the market's in trouble. NVO. I don't know why it makes me want to sing the bingo song every time I see this. There's a potential it's at 126 and or 137. I think 137 would be an exit spot. 126 would be a buy the dip spot. Super solid P&L. Weirdly super solid P&L. What do they do? Oh, is this the diet company? Diet pill company? Whew, yeah. So buy the dip. Because there's not a human being on earth that doesn't want that. Repercussion headlines, you know, something like smoking. In hindsight, go, oh my gosh, we didn't know it does this and nobody should do it ever. But that's speculation. Technically speaking, if you lose 120, you get an entry point that's for the ages below. OGN. Argonon. All right, so this is target 1 of the bearish red W. Target 2 is 19.6. Maybe you get there. I think rallies into 21.6 will be sold and you might end up lower low. OKTA, not sure why it's falling like it's going out of business. Do homework on the fundamentals. Wall Street may be on to something, I'm not sure. Let's see. Oh, okay. So securities, front door security to the digital world. Rallies into 82 will be met by heavy sellers on this chart. It's looking for a huge bounce, but it hasn't established the starting point. I'm going to tell you it's probably around 70.5. I'm going to put an alert there. And I believe if it does hit 68, it makes a good long for a strong bounce to like 88. But that's like multiple months conversation. So maybe this week I'll go long OKTA. Have I gone long OKTA yet? I don't think so. I would sell puts or put spreads to own shares. On bearish chart, I would be short here. I would not be long. But Nick, the tennis shoes are awesome. Yeah, they're awesome. But this chart is bearish. Good support. What is this? What are these 3 lines? What the Are you kidding me with this? Wall Street, come on, people. At least try to hide your cheating. Look at this. All right, so this is your determining factor now this week. What happens versus 44.2? They better close above it this week. Otherwise, I think they drift lower and give you an entry point below 40. Enter it below 40 if you want to. I wouldn't add. If I'm going long here, I would take a small bite just to get it out of my system. Support is at 13. And resistance is at 14.6 on this one. It's the middle of the range. Nothing to say about it fundamentally. Bearish chart, Oracle, they report earnings on Monday afternoon. So come to me in the live room. We'll discuss it, and I may give you a hint. Dinosaur company, in a good way. Not sure it has it in itself to go to, say, 153. Because if you do pop above 144, that 151 would be the target zone. I'm not sure why it would go there when the stock market can't find support. So more likely it's easier to get to 135 than it is to go to 148, I guess. Oxy. I did warn off of Warren. See what I did there? Man, Brad, I'm beating you to the punch here. What's going on? Okay. Just follow the lines, folks. Target 1, that's Nick's target. That's the actual target. So I think it's okay to get to 49.30 or lower, and that would be a nibble zone. That's what happens when you chase a headline that has nothing to do with the fundamentals of the company. And this headline was all about Warren Buffett. The P&L is fine. So if I'm an investor, I'm not adding. This is a technical hiccup. And if I'm looking to get into the stock, I would sell puts to buy shares as opposed to just buy shares. I most definitely would not buy calls unless I'm buying in the money calls that are leaps and partial. And I immediately would sell calls against them like I would sell against shares if that's possible. Sometimes it's not possible. Okay, so I'm looking for entry points, and I think the better points would be below 47.50. And that brings us to the last video of the week.